Hello, hi, and welcome. And this is Traders Talk, and I'm your host Meng Hon. And today is another exciting day because it is Valentine's Day. Okay, so for those who have joined me, welcome and happy Valentine's Day. And besides Valentine's Day, of course, today is a very exciting day for the market. And do you know why? Okay, because it's another very volatile day, and today we are actually waiting for the CPI announcement. Yeah. If you do not know what is CPI is Consumer Price Index. Yeah. So every month, the US will actually announce their inflation numbers, and somewhere around this time between this for the second week of the month, the CPI will be announced. And why is this CPI so exciting for everybody? Yeah, because it is a factor that actually influence the monetary policy of the government in the US, right? Because that is actually what it needs to actually, the data is actually important for it to actually assess whether they would actually continue the tightening process, or whether they would actually make it more relaxed in their interest policy to allow the market to actually go up. Yeah, because the market has actually came down for the last 1 over year, slightly above 1 year, mainly because of the tightening process of the Fed, right? The Fed to increase interest rates, and right now the interest rates has actually been increased from zero from zero all the way to 4.75. Yeah. So the last rate increase of 25 basis point was just slightly about a week plus ago. Yeah, a week plus ago, if not mistaken. And of course, the next one will actually still come in when in March. And after March, the following one is actually coming in May. Yep. So there is two more Fed meeting where they will actually discuss on the Fed rate hike, and of course, how much they increase or whether they will increase would actually be dependent on CPI data as one of the main factors driving them. Besides that, of course, labor reports, unemployment, and their GDP are also factors that will actually influence all this. Yeah. So of course, because of all these kind of things, the market has actually been quite volatile for the past many months, and of course, it's like us going on a roller coaster ride, where sometimes we go up, and when the key announcement dates like CPI comes in, right, then of course volatility will increase. The market might actually come down because of the expectation that things might go wrong. Yeah, so there might be some profit taking. Some people might sell their shares. Yeah, and of course after that, if the data is positive, then of course the market will start to actually rally. And after that, when there is a date where the Fed chairman comes out to speak, then of course things would slow down, and then the roller coaster might actually go spiraling down, right? So this is something which how to say, we have been going through for the past 13 months. For the past 13 months, yeah. Of course, before that, it was all the way up, especially after the COVID, right? It was all the way up, and everybody was very happy. Then, then came this trailing ride. Yep. So I hope that you guys are not frightened by this roller coaster, because I would say even with this roller coaster ride, there are some things that are actually still a bit more predictable, in the market. And of course, with predictability of what is actually going to happen, that's where we can actually also capitalize that predictability to actually make some money off this kind of situation. Yep. Okay, so don't be afraid to actually trade, because you can actually also trade certain products that can actually give you a high probability of returns with also managed risk, and you would actually expect at the end the outcome to be more positive towards your side, because of the so-called patterns which has actually happened in the past. Yeah, and of course today I will actually go through with you this predictable pattern that has continuously happen throughout many months, where you can actually use that to actually generate some income during these volatile times. Yep. So this is actually a trading show. And of course, if you like this trading show and me actually showing you how to actually trade the markets with a high probability kind of trade structures using options, then of course please stay on and call more friends to actually pop over, so that it can actually also be an enjoyable time. Okay, if you love this, give me a thumbs up. Then we will actually continue the show, where we will actually talk a bit more of the market, which has actually happened what has actually happened in the last week, and what do we expect to happen this week. Yep. Okay, all right, so let's go. Okay, today we actually started a bit late, an hour late. Normally our show would be at 7:30, and of course because of some commitments, I had to actually defer the show by an hour. Yep. Hopefully that does not how to say mess up with your time, because in an hour's time the market is actually going to announce CPI. Let's check the CPI. Today is Tuesday, right? Yeah, CPI. Yep, 9:30 CPI. Yeah, so at 9:30 the CPI will actually be announced. And if you do not know where to actually get this CPI, it's actually on this Forex Factory. This is a website where we actually go and check all the key announcement of the major markets or major countries. We can actually check from this website. Okay, so CPI announcement coming on 9:30. Okay, so just keep refreshing this data, and that will actually show up on 9:30. And once that show up, you will actually see the next thing you actually see is the market, right? Is the market. Market has not opened right now, but of course once market open, then you will actually see the prices. But at 9:30 market has not opened, so if you actually want to see, then you have to actually go to the futures. Futures, you either go to this MNQ futures, which is the Nasdaq futures. Of course now it's actually trading, right? This is actually live, right? Nasdaq futures. Or if you want to actually go to the S&P mini futures, that is MES, yeah, MES, E-mini S&P futures. Okay, ES. Okay, no, I can't go. ES. Right. Okay, for some reason I can't access this. Okay, doesn't matter. Just go back M and Q. Okay, futures. Right, just now we can enter, right? Now we cannot. Okay, so I don't know what's wrong, doesn't matter. Let's go back to SPX. Okay, so that is MNQ and MES, right? Okay, so this is S&P, right? S&P, where are we? We are at 4137. Yesterday was actually a very bullish day. Yesterday itself, the market has actually went up about 1.15%, about 46 points up, and you can actually see that practically the whole day, right? The whole day, the market has actually been going up. You can actually see this full bar, right? Full bar from the bottom, right? When the market actually started, it went all the way to closing. is up, yeah. But of course, what are the key areas, right? Which we always discuss key areas, because that is actually important for you guys to know when you actually want to trade the market, right? What are key areas for you to actually watch out for, so that you know how to say, you have some indication what kind of levels that you need to actually look at, support and resistance lines, right? For the market, which basically we track using this S&P, right? S&P, which basically track the broader market, 4002. Okay, let's put 4002 here. Okay, so we spoke about these two levels many times, right? 4001 and 4002. Okay, so if you look for the past, this is a daily chart, right? So for the past weeks, right? For the past weeks, what has actually happened? Let me make myself smaller so you can see the chart. You don't need to see my face so big, right? Okay, all right, that's much better. Okay, so so you can actually see that we are actually hovering around between 4001 and 4002 level. Of course, the market earlier had actually breached this long-term 1 year resistance line, right? This resistance line, this trend line, right? It has actually breached at around this part here. It has actually breached up here, and of course, after it has breached, then of course the market practically for the whole month of January, right? The market actually went up by more than 10%. Yeah, more than 10% here. And of course, once it reached this level of 4002, right? That's where the earlier high levels, roughly more or less the earlier high levels, right? This was 4001, and then this was actually the resistance levels at 4200. Yeah, 4200. Then of course it actually bounced off here and came down until Friday, and yesterday, right? It actually came back up. Of course, I would not say that it's actually going to be a confirmed uptrend, right? Confirmed uptrend. After this, then it can breach the 4200 level. Yeah, of course, the key thing which we actually need to watch out for is what kind of data is going to be released tonight on CPI. Yeah, CPI. The expected CPI rate that the expect is 6.2%. Last month it was actually 6.5%, and of course this month the expectation is that inflation will actually go down by 0.3% to 6.2 from 6.5. Okay, so what's going to happen if the market actually announce a CPI of 6.2? Okay, so of course, if it announces 6.2, more likely it is actually on expectation. That means inflation still is coming down from 6.5 to 6.2. Then of course that would actually be positive for the market, because it is expected inflation is running down, and when inflation is running down, then the plans for the Fed is so-called on track, that they are bringing inflation down to the level that of their target, which is 2%, which is a bit more far away, right? But doesn't matter. It is actually still coming down, which is good for the market. So that would be positive for the market. Okay. But what if it is not 6.2, but anything above 6.2, for example, 6.3, 6.4, and even worse, 6.6, which is basically higher than last month's inflation. Okay, then if actually that happens, right, more likely than ever, the market would actually come tumbling down, come tumbling down. I would say come tumbling down, right? Of course, when it tumbles down, there are also levels where we need to actually watch which are key levels of support, which when it actually comes down. Yeah, of course, one of the levels, possible levels, can also be this earlier trend line, right? Earlier trend line. This can be one level where it forms support. That means earlier it was resistance, then it might form support. Or the other one, it can actually come to this level somewhere around, I would say, 3,900. Let's put it at 3,900. Yeah. So we always when we look at support resistance, right, we actually always find areas, right, areas where it is actually coming down to the lowest area, right? For example, too clouded, you can't see, right? For example, areas like this, because I mean, you sometimes you will be also surprised, hey, how come this guy, right, is actually just talking, and then suddenly he comes and talk about this support, this resistance, this level, that level. Where does he come out with all these figures? Okay, what I do is basically I look at the charts, right? I look at the charts. It is of course one possible area only. Possible area is not fixed. It's not a confirm area, but of course it is areas where many people are actually looking at. Many people are also looking at the same areas, and because many people are actually looking at the same areas, right? So the market might also behave in a predictable manner, correct? Like I said earlier, the market can be predictable, and of course, if we know how the market works and how the emotions within the market, right, that's where we can actually how to say, put in more high probability trades. Okay, so for example, when I say support levels, right, for example, this can be a support level because this was the previous low before the rally went up, right? Before the rally went up, so that can actually be a support area. And that's one area. Yeah, earlier I mentioned this line can also be a support, and of course this level down here can also be a support, because you can actually see that within this area, right, within this area, the how to say, the market has actually been bouncing up and down, and of course every time it touches the lower level here, it goes up, it goes up, it goes up. Then of course this is actually a very strong, I would say very strong support area at 3,008. And of course compared to the one above and this, then of course the more times that the price touches this line, the stronger the support or resistance. In this case, the support. Yep. So these are levels where how we actually look at the market, how to say, the stock, the stock chart, or this basically the market chart on SPX. And of course if you put it to SPY, then that would actually be a similar areas. Okay, then of course you start to actually use these areas to actually plan for your trade, For example, if you look at the areas where you have many resistance, right? Resistance 1, resistance 2, resistance 3, resistance 4 congregating here, then of course if you trade options, right, then you can actually place trades. For example, bear call spread. If you think that the market is bearish, right, you start to actually put bear call spread at levels above this resistance level. And of course, if you think that this is actually a support level, then you can actually place trades. For example, you can actually place bull put spreads around here, or you can actually also do say, for example, naked put. Don't do naked put on SPX because that's very expensive. Yeah, so you can actually do a naked put on SPY, the ETF, at levels below strong support levels. Yeah, so that's how you look at the charts, and how it behaves to actually try to make assessment, and basically use that assessment to actually place your trades. Yeah, of course, some people don't even use this. They don't even look at the charts to actually trade the markets. Yeah, of course, that is another form of trading, and of course, that is I would say when you have a higher level of understanding on how option works, then you can actually graduate to that level to actually trade based on I would say your portfolio delta, and having a position where you actually manage your portfolio delta to actually generate income through selling of options, yeah, because that is what I say, the real form of options trading, which basically gives you a perspective or way to actually formulate how to say a consistent kind of returns, disregarding where the market actually moves. It can go up, it can go down, but you actually manage it in that way. Okay, I won't go through and confuse you guys, but of course, what I have actually mentioned earlier just now, that is basically using so-called technical chart patterns to actually formulate your market thesis, and from there use that so-called predictability pattern to actually trade the market. Okay, so yeah, I mean, like I said just now, everything right now is waiting for the CPI 9:30, and of course, if the information is as expected or below, then of course it's a bullish how to say bullish sign. And of course, if it is higher than expected, then of course that is actually a bearish situation. Yeah. Okay, so that is 1 month, right? That is 1 month, and this repeats every month. Yeah, this repeat every month, and of course, because that data is what the Fed looks at it, what the whole world is looking at it, all the traders are actually looking at it, so it becomes so important. On the normal time, people are not bothered so much about that, but of course, because of the situation right now, people are actually more bothered on this data. Okay, so again, we cover these kind of things many times, and we starting this year, we have also issued our so-called ad hoc newsletter. Okay, we have a weekly newsletter, and we have an ad hoc newsletter. Okay, so if you are not subscribed to our newsletter, go ahead and subscribe to our newsletter. It's free, like this show is free. We don't charge anything because we feel that it's important for us to actually share our knowledge and what we have actually experienced, right, to everybody who is actually trying to take up trading. Okay, so this is our weekly newsletter, and of course, this week we actually issued our 100 issue. Okay, weekly newsletter, we actually issued our 100 issue. Okay, that basically 100 times 7, right, is actually 700 days, right? Okay, so basically for the past 700 days, right, I mean, we have been diligently issuing this newsletter to our readers, and of course, we would greatly appreciate for our readers to actually give some comments. Because if you download the app, right, there is the newsletter is actually via this app, Substack. If you download the app, then of course it is actually an easier way for you to actually follow us. Okay, because once you download the app, right, in your phone, right, Substack, you can actually put comments on our newsletter. You can put your questions on our newsletter, and then we can actually reply you guys. And of course, if you love what we write, right, please click the love button in the newsletter, so that we also know that there are people behind who are actually reading our newsletter. Otherwise, if you don't get this response, right, what's going to happen is that we have issued all these 100 newsletter, and there are a lot of what we call silent readers behind reading, because we know who are reading it, because we get the data, we get the statistics. Okay, so we know who are reading it, but all these people are actually very silently reading, like it's secret. So you don't need to be secretive, that you cannot show yourself to us, because we also want to actually know you guys. And of course, those people who are actually watching us live, we also want to know who you are. You can actually put in a love, you can put in a like, and then if you are connected through Facebook, then of course we also know who you are. And of course we do know who are our followers, and of course we really appreciate those people who follow us every week, diligently coming on our show, and actually watching us, whether or live or after event, right? After event, watching the recordings. Okay, we really appreciate that. So 100 issue is not an easy job. I would say, it's not an easy job, that you have to actually do this every Sunday or Monday, right? We issue it on a Monday, right? And of course, we try to issue it as early as possible. Sometimes, if we are tied up with something, then of course, it will be later. But at the end of the day, we also try to actually issue it before market opens on Monday, because what we cover here is that we cover I mean, we do a lot of things here. I mean, we talk some interesting things just for leisure reading. Then of course we talk about the market, then you can actually read what has actually happened in the market. Here we talk about market, the CPI, we talk about earnings, then to keep you abreast of what's really happening. Because if you actually want to trade the markets, right, then of course this kind of information is a bit important for you guys to know. And there are certain times where you need to be a bit careful when you are trading. Like for example, today you need to be a bit careful if you have trade positions, because that can actually go from a profit to a loss if the situation actually change a lot. Yeah, and of course we do also give new contents, like for example, because of the market volatility in the US for the past 1 year has been so tough, right? Then the things that we felt is, okay, maybe maybe some people would actually shy away from the market during this time, because they felt that there are a bit too much uncertainties there. And then we see ways for them to actually look at other trading opportunities. Yeah, because trading is international. Besides US, of course, there are other markets which you can actually trade. And of course, one big market is China and Hong Kong. China is more, Hong Kong is more easier accessible. And of course, even in Hong Kong, most of the big Chinese corporations are also listed in Hong Kong. And the good thing is, of course, Hong Kong markets do also have options. Options are also available on the Hong Kong market. But of course, because the market is not as matured as the US options market, then of course the liquidity might not be there. Then prices, you might not actually get filled at a small spread, and of course some it might also be difficult for you to trade because of the large quote bids. Yeah, so these again are some pitfalls. And of course we also try to actually share with you guys, if you are trading in the new markets, what are the things that you actually need to watch out for. And of course we started also because some of these are also new to us, you see, because it's not that we know everything. Some of it we also try to actually go through it ourselves, go through it ourselves, experience it before we actually start to actually share with you guys. Yeah? We just don't simply share with you guys things that we are not familiar with. We try to actually also go through the process. And of course, for the past few weeks, we are actually talking about trading options on the Hang Seng Index and also the Hang Seng Tech Index. Yeah, because these index instruments, like I said, would actually be more liquid as compared to individual stock options. And of course, if you actually don't know much about individual companies in China, or you're not familiar with them, then of course trading the index just like SPX or SPY would actually be something much safer. And of course, if you know, after the after the CCP so-called elections and which ended in October, right? Then of course the China market actually started to rally after that, and of course the other things which came in December, they actually stopped all the lockdown, right? Then of course the Hong Kong market has actually moved more than 50% up since then. Yeah, 50% up since then. And of course right now it seems that it is actually having some form of resistance. And of course for the past 2 weeks the market has actually started to actually come down. Yeah, and of course when market comes down, then that lies the opportunity, if you have actually not entered the market, to take that 50% upside. Then of course that lies the opportunity, because market retracements is an opportunity for you to actually start going in if you actually want to long the market. And of course if you want to short the markets, it can also be an opportunity for you to do that. But of course I would not short the Hong Kong market right now, because the tendency for it to actually move higher is much bigger. Yeah. So yeah, this is the ones which we shared in our newsletter. Hopefully you have actually took the opportunity to read them. And of course this starting this week itself, we also started to look at futures trading. We also started to look at futures trading in the what is that, in the Hang Seng. But of course we look at the mini Hang Seng Index, mini Hang Seng Index, which is just like the mini S&P, right? Which basically have a smaller so-called size, lot size, smaller lot size. Yeah, so we did mini Hang Seng Index this week. Yeah. Okay. So yeah, and the other one which we actually wanted to share is the ad hoc newsletter, which is our quick bites newsletter. And why we call it ad hoc is because we do the weekly newsletter that's actually issued every Monday. Okay, and of course if we want to share ad hoc stuff with you, trade ideas that we felt that we are actually going to do, and we actually want to do some ad hoc sharing, then we actually use this newsletter to post out our so-called ideas. And of course these are just our ideas. Then of course you can follow through them to actually learn, not necessary for you to actually enter any trades, but just for learning purposes you can actually do. And what we did, we did last week, the issue on the Exxon trade, right? Exxon trade, and of course we entered into this Exxon trade, and it is almost about 20% into profits, 20% into profits, just after we did it on 8th of February, right? Yeah, we did it on 8th of February, and of course after 6 days it is already 20% into profits. Yeah, our target is just 50, and maybe another 1 or 2 another 2 weeks, I would say. When we reach there, then of course we would exit the position. And if you download this Substack app, right, we will also message you in there that we are exiting the position. Then of course you can actually see the message immediately through the app. You don't need to actually wait for it to be sent through the email. Yeah. because if you don't have the app, then of course it will be received in your email inbox. Yeah. Okay, so this was Exxon, which we did. What I actually wanted to cover today is actually on this VIX. Yeah, VIX. We did this issue on 18th of January. We did this issue on 18th of January, and of course, if you guys do not know what is VIX, right? VIX is actually the volatility index on S&P 500. Okay, volatility index. Volatility means it measures the volatility of the S&P 500. Yeah. So of course, what we actually shared in here is that we said that the VIX has a predictable pattern, right? Predictable pattern, and of course you can read this in our newsletter. But we can actually go through this through here, right? And how we basically can use this predictable pattern in the market to actually trade with high probability. Yeah, high probability. Okay, so that was actually on 18 of January. Okay, so 18th of January we issued this newsletter, but we did not enter the trade on 18th of January. Okay, because I think subsequent to the writing of this, the VIX has actually moved up away from our targeted entry price. Move up away from our targeted entry price. Okay, so if you look at VIX, right, this is VIX. Okay, this is VIX. So what we said in 18th of January, which is somewhere around here. Okay, around. Okay, so we issued it on here, but of course, when we did the analysis, right, what we did say is that VIX was actually trading at its lowest, which is somewhere around 18, yeah. Okay, so when the market actually comes down, VIX will actually go up. Okay, so remember, VIX has an inverse reaction to the market. Market goes up, VIX comes down, market goes down, VIX goes up. Okay, so that's inverse. Okay, so what's happened is that, of course, in January itself, right? In January itself, the market has actually rallied. So when market rally go up, VIX comes down. Okay, so VIX actually came to its lowest at 18. Okay, and then when we actually look back into the past, right, what has actually happened is that VIX rarely goes down to this level for the past 1 year. So basically, you're talking for the past 1 year, right? Somewhere from here, somewhere here, yeah. So for the past 1 year, right, VIX, you see, VIX, this is 1 year. This basically area is 1 year, right? So for the past 1 year, there are only few times where VIX actually came down lowest to this level. In fact, they never came down to this level. It was only in early January. It was actually sitting here, and right now, after 1 year, it comes down here. Before that, it was here, but now it's actually sitting at this low level. So what we said is that, yeah, since it has never came down lowest to this level, it might be possible that, okay, this is actually one of the lowest level it can be. Okay, and of course, things in the market has not resolved itself, and there are a high chance that VIX will go up from here. Okay, so we said, okay, since VIX will go up from here, then we actually enter a trade that is a directional trade, and that would actually give us a probability to actually win in the trade if we actually do this trade. So we did what we call a trade, which is basically a defined risk trade. That means you know what is your entry price, you know what is the max gain, max loss that you will actually achieve from this trade. We call it a bull call spread. Yeah, a bull call spread is basically just buying a call, at one strike price, okay, and then selling a call at a higher strike price. Okay, yeah, it's a two-legged trade. Yeah, buy a call at a lower strike price, selling a call at a higher strike price. Okay, so we did that. We said, okay, if VIX comes, because after that the VIX has actually went up to about 19. Okay, then then we said, okay, if VIX comes back down to 18, then the lower strike price for you to actually enter the trade is buy a 18 call. Okay, buy a 18 call. And the higher strike price which you can actually do is you can do anything above 18. But what you need to actually bear in mind is that whatever price you choose here is actually the target price which you expect it to go, and at towards the expiry of the duration of the trade. That will actually give you the maximum profit. For example, if you do an 18 call and you sell say a 30 18 call and you sell a 30 call, okay, 30 call is somewhere around here, right? Somewhere around here. 30 strike 30 is somewhere around here. So do you think that in 1 month time, that the VIX will actually spike up to 30? It is possible if the market crash. If the market crash, then of course it is possible for it to actually go to 30. But of course, we are talking about getting in and getting out quick. So don't be greedy. Of course, if it goes to 30, and if you enter into this trade, it will be a very profitable trade for you. But the probability is very low, and you have to pay very expensive to actually enter into this trade. So rather than doing that, we just say, since we actually want a quick pop means that a quick win, we just do a $2 spread up. That means 18, and then you do a $2, which is basically 20. So 18 and 20. So the chances of VIX going up to 20 is higher than VIX going up to 18, and we are just basically doing this less than 30 day trade. Okay, so we did when you do that, basically when VIX goes up, then of course the trade would actually be profitable. And we said, okay, entry price would basically be between 60 to 70 cents. And if you do 60 to 70 cents, $2 spread, then basically you are looking at a profit of between 130 and 140. 130 and 140. Yeah. So the risk reward ratio is okay. I mean, basically you get more than one time reward, right? So it is okay, and it's a high probability trade because 18 is the lowest you can get, and of course lowest it had been, and of course it's quite easy for VIX to actually spike up. You see, so we did that trade late, but of course if we did it earlier, then of course VIX would have immediately spiked up to about 21 from the lowest of 18. Just in 4 days, it has spiked up to above 21. Then of course we said, okay, just be patient, wait. And of course, in fact, VIX actually came down, right? Came down. And it went, in fact, lower 17. So for those who are patient enough, would have actually waited for VIX to come down to 17, and then they do the spread. They can do a 17 and 19 spread. Yeah. They can do a 17 and 19 spread, and once it come down here 17, and you can see that 1, 2, 3 within 3 or 4 days, right? Already you would be in profit on the trade, and you would have exited it in less than a week. You would have actually exited the trade. But sometimes we are a bit rush, and of course even for myself, human nature, right? You are a bit rushed, and you think that VIX will the trade will actually run away, and you actually enter early. In fact, I did not wait for it to come back to 18. I did a higher trade. I did a 1921 trade. Yeah, I did a 1921 trade. So basically, I actually entered I think when it was actually coming down here, right? Halfway, I already entered the trade. Yeah, because I thought 19 would already be a good entry level. I entered the trade here. Okay, of course, when I entered the trade here and when it's continued to actually go down, right, then of course I would actually start to make losses lah. Correct. But of course, having experience in this, I'm not so worried about the losses because I felt 19 is still low, and of course with all the news coming up, right, of course before that was the Fed rate hike news. And then subsequent to that, before the expiry of the trade, which was 17 February, right? I took the 17 February expiry. Then there was actually a CPI coming this week. Yeah. So I felt, okay, because of this key news here, definitely volatility will spike. Okay, volatility will spike, and when it spikes, it's time for me to actually exit and get the profits. Yeah. So of course, I paid. I think when I entered this trade, I paid 93 cents. I paid 93 cents. Yeah. And of course, when it came down here, I think I was losing money. I think I was losing money, but doesn't matter. As I said, I patiently waited, patiently waited. Okay, so I patiently waited for it to spike, and of course, it spiked last Friday. Okay, indeed it spiked last Friday, and it went up to above 21. Okay, it went up to above 21. Yeah, so you see that it actually went above my upper call strike. That's where the profits will actually start to come in. Although not 100%, because like I said, the max profit will come in if it is at your upper strike on expiry, or above your upper strike on expiry. That is the max profit. But I exited 1 week earlier. Of course, I did not get towards the max profits. I think it was about 50% of the max profit was actually achieved. Okay. Again, I did not want to wait for the CPI, because if the CPI news is good, what will happen is that VIX will actually come down, and once it comes down, then of course I will actually lose on the trade. Yeah, because it's already on expiry. I have 5 days chance for it to pop, right? So don't take that chance. I take 50% profit and actually exited. Yeah. So this was the trade. So like I said, predictable trades. Okay. So I predicted it here when it was actually at 18. Yeah. It will spike. And of course, once it comes down again, if you have taken the trade when it was 17, then of course it would also be quite profitable, even more profitable than my trade, because when it was actually 17, I also tried to do the trade, and it only cost maybe about 60 cents, 60 cents. Yep, 30 cents cheaper than what I have actually done. Yeah. Okay, so yeah, I mean, I did not get that trade because I also wanted to pay 50 cents only. Greedy, right? Greedy. So I did not get into the trade when it came down again on the second time. But it's okay. I mean, with one trade, I would have actually already made 50% of my cost, right? My cost. Yeah. So again, these are trades which are actually predictable to trade, and you can actually do it on both sides. You can actually do it on both sides. Yeah. So of course, the lower side would actually have a bit more safe patterns because of this historical lows it has actually achieved. But if you actually want to do upper how to say upper level trade, then of course it does not give you so much probability of it to actually come down. Yeah, because VIX would tend to go up more than how to say, VIX will actually tend to spike up from lows. Of course, from highs, only if it is very high, then the probability for you to actually get VIX to come down is high when it actually reaches the top here. Okay, when it actually reaches the top. So it's actually the inverse. Earlier we were actually looking for the lowest, right? If you actually want to trade the high side, then of course the levels you actually need to look at, right, is actually on the top, which is basically at these levels at about 34 historically, about 34, 35. That's where you can actually trade VIX to come down, to actually come down. And of course, if you trade for it to come down, then that's the time where you can actually how to say, do a bit longer term trade, so that you actually ride a bigger downside coming through from here. Yeah, because you see, once it actually spikes up to 34, right? Yeah, if you want to actually do a quick pop, you can actually do a quick pop and you exit. But if you want to actually make more money, right, and you are a bit more patient, right, then you do a longer term trade for the trade to actually expire. Maybe here is October, right? So this is December. So basically, you're talking about 3 months, right? You're talking about for it to actually the market to actually cool down, right? To actually cool down from a downturn, right? Let it cool down after 3 months for you to actually get this how to say this 20 to 34 $14 $14 movement from the upside. Yeah, so that is again similar kind of thesis, how you actually enter the trade, but because of the different how to say situations and the different pattern, how VIX works below and up at low levels and high levels, right? Then you actually trade it differently. Okay. Yeah, so I think these kind of things you get to actually learn over time, whether how to say, whether it is actually through reading up contents from newsletter, like things like from us, or trying to actually catch how to say, catch educational shows, right? Educational shows. How to say, to actually learn up all this. But of course, once you actually learn it, right, it's good for you to actually practice. And if you're not comfortable to actually do it on a live account, you have what is that? Uh, 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 a mock account, dummy account, where you can actually test and use all these kind of strategies to actually be familiar with it. Yep. All right. So I've spoken a lot. I need to drink a bit of water. All right. So if you have how to say, understood the concept, how we actually look at things, how we actually structure out trades using different kind of strategy. Like for example, in this show here, we talk about bull call spreads. Of course, sometimes in our shows we talk about other type of strategies. And of course, like when we did last week on XOM, right? XOM, we did a Jade Lizard, which is another kind of strategy. And of course, that strategy requires different kind of expected market movements on that stock, right? To actually do so-called trade entry. Yeah. So plenty of things to learn. Is again whether you find these kind of things interesting for you to actually learn. Because once you have actually learned this, right, the thing is that it sticks to you. And of course, with experience, then of course you can make a couple of $100, right, off just trading, whether you are actually actively trading or you are actually casually trading 1 or 2 positions a month, right? Then that is still okay, right? Because if you trade 1 to 2 positions a month, it's also possible for you to generate $100 to $200 of extra income, right? If you are trading just one or two lots. Yeah. So yeah, so that's the cool thing about trading, right? And of course, for me, I like it so much because when we are actually sharing all these kind of things to you guys, right, I would also do my own research and trying to actually test strategies. And of course, once it works out well for us, right, then that's the time where we actually share it out with you guys. And of course, like the things we tested like this week on this Hang Seng futures, right? Hang Seng futures. And of course, you can see that the Hang Seng futures is still tradable right now. They have two sessions. They have a few sessions. I mean, they start in the morning. They break for lunch, and then I think they finishes up till 4, and then I think from what time from 3 or 4 they start again. I think from 5 o'clock. 5 o'clock the futures start trading again, right? 5 p.m. and it trades all the way to 3 a.m. So sometimes you feel that US market you trade until late nights, right? I mean, sometimes I trade until 3 o'clock, 4 o'clock, or 5 a.m. when the market closes, right? You get very tired. So if you move to so-called Asian trading, right, then it actually fits back to your time, and you can actually trade the products in Asian markets, and of course for US markets, then possibly you trade in the earlier part of the night, right? From nowadays 9:30, maybe you do until 10 or 11 o'clock, right? Just look at some positions, and that's good for you, and then you go to sleep. Yeah, because like today I woke up at 6 a.m., right? And 6 a.m., right? I mean, I finished at 1 a.m. trading the US market, and I had to force myself to sleep because I had to go out at 6 a.m. This morning. And when I came back just now, right, I was practically sleeping all the way driving home, as if am actually on a Tesla car, auto drive, but I was practically half asleep. So this kind of market, if if it fits you better, then of course you can also try to move to the Asian market to trade. Yeah, many opportunities. Just whether you want to actually take those opportunities to trade different market, different products, different structures. Okay. All right, so yeah, so today 9:30. Okay, maybe we hang on for a few seconds more, a few minutes more, so that we can actually look at how to say the what is that, the futures, how not the futures, the CPI, how it is, and basically how the market actually reacts to it. Okay, let me just put on my account, right, so that I can actually go through the futures with you guys. Okay, futures is okay. Somehow I can't go in the futures or indices. No, it's futures. Very funny. Slash MNQ. Okay, maybe it's this account. I close this account. Right. Okay, just a sec. Just bear with me. Log off. Go to log off. Okay, maybe I close this. Maybe it's live. It don't show up in live, but no, I always trade this. Something wrong here. Futures. ES. Oh. Okay, if you have any questions, just post on the questions. Let me restart this. Trading. Okay, one more minute. One more minute. Okay, let me share now. I mean, I don't use a live account, right? So I couldn't connect, but you can actually see the volatility already right now, right? You can actually see the volatility. You can see that this is actually the micro mini for Nasdaq, right? You can actually see that it is volatile. You see, it's actually coming down. You see, the news is already out. The news is already out, and of course, the CPI is higher than expected. Higher than expected. Okay, higher than expected. Let's see. 6.3, 6.4. Oh, gone. The market is going to crash. Okay, so you see the 6.4, like I said, 6.4 is higher than expected. So inflation came higher than expected, and as you can see that the market has now dropped by how many points? Not 88 points. 88 points. This candle, 100 points. It will actually drop even more. Okay, so if you have traded any positions, right? Okay, so good because yeah, I mean market drop means VIX is going to spike up, right? VIX is actually going to spike up, right? VIX, yeah, VIX is actually going to spike up. Let's see VIX. Okay. Later VIX will open later on, yeah. But later you see VIX will actually spike up to 20. Oh, you see, no, why is VIX is coming down? Eh, how come VIX is coming down? VIX should actually go up lah. I don't know why it's actually coming down. The market turned the other way now? No, not yet. Okay, but I would say VIX would actually go down later on lah. Yeah, VIX will actually go up. Sorry, go up. Yep, go up. Okay, unless this is temporary lah. I mean, this would actually return. Okay, maybe the market is turning. Maybe 6.4 is not that bad. The expectation is higher, but anyway, you can see that this is a huge long candle. So if you are scalping, then of course this would actually be a very profitable trade if you trade all the way down here. Okay, so let's see if the market when it opens, if it actually continue this way or it actually go the other way. But it seems that the market is taking this not that bad because it from how many 100 points here coming down, right? It's actually now going into the green, is it? Going into the green. Yeah, despite the thing here of 6.4%. 6.4%. Okay, 6.4%. compared to 6.2%. Okay, but let's see the market later is already positive, right? It's already positive. Oh, it's very positive. Okay, so yeah, it's also not so predictable. sometimes you can also be totally wrong. But I would say depends on this is the futures, right? Of course, this would have some influence over the market later on. For me, green is not good for me lah. It will be good for my long-term investments, but of course, short-term, the day trades, I would need some the market to actually go down, go down by expiry in February. Yeah, but anyway, let's see when the market opens how it behaves, because this can also change from now until an hour later, right? This can be totally going the other way. Okay. Yep. So good to share some life experience with you guys. And this is a very unpredictable down and up. Yeah. So that's where the how to say, the volatility of the market can also be very dangerous. One time down, one time up, just like a roller coaster ride. Yeah. Okay. All right. So yeah, so happy trading this week. Happy Valentine's Day for those guys and gals who have actually joined me on the show, and have a safe trade, and do go on predictable trades to be safe, to make sure that at the end of the day you guys generate money off trading trading the stock market. Okay, so until next time, do like our show, share our show, download the Substack app, talk to us, yep, and give us more comments so that we can actually share more with you guys. All right, thank you, bye bye.